Nightly Strategy Podcast for Tortoise Capital, April 3rd, 2020. This is Ken speaking. Hope you all are healthy and wash your hands, stay off the beach. Be mentally tough. It's the early innings of this game. You know, the 1918 flu came around 3 times before the thing was done. So as bad as it's going to get, that's just the first wave, so be ready. Okay, so here's today's price action in the yellow box. Opened near yesterday's close and then tested a little bit higher and then was weak going into the weekend. Stayed in the dragon, though. It was kind of an inside day. This is a wait-and-see market. Good news is it didn't fail. Bad news is it didn't gain, so the tension is going to increase. You can see the PSAR just still marching forward. We're still well into the spring, in the middle of the Red River. We don't have the long bias yet, but at least it didn't fail prior to the weekend. It closed below Monday's open, so it was a negative net week. But to me, it was less than a 50% retracement, so that's something positive anyway. So here's the 10-day high and 10-day low and the 30-day low and the 30-day high. So we are at about 31% sell-off compared to the swing high. Yeah, Lisa, I think it's just you. Let's see. We have the all-time swing high, peak of the dragon, peak of the RL10 here. We have Z plus 3. We have the long-term fair value with the RL270, Z1. Bollinger Band mean and the RL90 are simultaneous here. The 10-day high and the peak of the RL10 are about the same level. Here we have the 1-day low, the Z minus 1, which is almost the skin of the dragon. We have the belly of the dragon here, which we're saying is a really significant price level because that was the weekly swing low. Stand by. We get 35 people tonight. Well done. All right, so the belly of the dragon is the key support level here at 236. Belly of the RL10 at 223, and then the this goes back a couple years at 218. So cautiously optimistic here. Didn't fail. The news this weekend is not going to be good, though. So I've got some concerns on that one. Looking at the way the sectors ended up today, we've got oil sector, so USO and Devon Energy, Simon Property Group, Tesla, Boeing and Walmart came back, Cliff and Treasuries. Here's the S&P down 1.5%. Down at the bottom of the stack, Wynn, Virgin Galactic, Brazil, Mexico, U.S. Steel, Timber. So some real problems in here. When we get to the speed run, we're going to see that this SCO, which is the triple inverse of oil, that was down 29% today. I guess it's a double inverse. Seems like it should be triple. It was down 30%, and USO was up 15%. This I played this as a swing trade, but it was such a good one-day play that I just decided to take it. Okay, so here's the Friday night report for Monday. We've already talked the health check. So we are still in bearish volatile. We're in the middle and low end of the NDX. Red bearish on the percent stretch, minus 17%, below the 200-day moving average. Risk Z is risk off at 0.949. The Z-score is minus 0.57, so we've come all the way from 4 sigma to half a sigma, so the swing side is still cautiously optimistic. can see the NDX is rolled over here. The standard deviation of the gaps is 1.5. The biggest single gap in the last 200 days has been favorable 6% and a negative minus 10.45%. So that's just how volatile things are. Average move in the S&P at 1.5% is double the average size that it was 6 months ago, just so you know. No signals in the channeling and overreaction. Tactical summary. Plenty of dojis today. Not surprising that the market was like that today. Lots of auto framers are setting up. Now, this is why you're starting to see a lot of auto framers. We're still a considerable distance away from the 10-day high for many of these symbols that have been lagging behind the market itself. And the relatively low volatility and the low range from today makes the range risk very small, so then you can start seeing pretty good multiples just to the 10-day high. Well, that's why we are seeing many of those speed run symbols, like Japan especially, set up for nice breakouts in either direction. So you're getting that coiled spring effect, and there's a large move implied in either direction since we're in bearish volatile. This is actually the most perfect conditions of all in order to do hybrid trading, starting with an intraday turbo position. Begin with the hybrid frog, and then if you get a strong directional day, then convert a piece of that into a core position for the swing. I would recommend only about 1/5, and the reason for that is that the day-to-day shift in directions is significant enough, and the overnight gaps have been large enough that you don't really want to take on all of that extra risk. Now, that's one of the reasons to be interested in the Forex course that Dr. Morrison and the gang are fighting their way through right now. But that's the kind of market that when you see that many dojis and this many auto framers testing out well, then you want to sort of take notice of that. American Express is very interesting because that's the only one in the Dow 30 that has a single-digit RSI too. So that is really sold off sharply and was down 4% today. In the ETF 30s, not as many dojis. Still a considerable number of auto framers that are doing pretty well. Mexico, to me, is a very nice play. It is the only one that has a single-digit RSI too. If TradeStation was cooperating with us, we would see a much better short on that one than almost any other ETF because it's at the bottom end of its swing and it closed poorly. Okay, so lots of negative moves out there. Oil, just look at this roller coaster. Over the last month, it's down 40%. But in the last day, it was up 15% and 20% over the last 10 days. So that's about as wild as you could ever want to see. Let's see, next one up here. The pinch and stretch. We're starting to see more pinches. And the negative Z stretches are now under 3. Even the worst one is under 3. But you can see how bad Mexico and American Express are. They're the furthest ones under their Bollinger Band mean. So it's not surprising that when we go back and look, we see Mexico with an RSI value of 2 and AXP with an RSI value of 4. That's just how bad they are. So in their own little populations, those have the least relative strength. The most expanded pinch box example there for EWW, and I'm also going to say IYR, which is real estate, they are both deeply out of their river, and their pinch boxes are extraordinarily wide. What that means is that they have both experienced an extraordinary adverse directional swing move. So that's the way to keep playing those, is if they're going in that direction on weekdays in the market, you could be piling on those things. And that's been the case for both of those symbols. I was hoping we could get in the background to show that, but it's not cooperating. All right, moving on. The auto framer, there's 15 symbols that are better than 2-to-1 on a retest of the 10-day high, just using the range risk. So that's one that's, these are all the mechanical framing prices that if you were looking to set those up, you could go take a quick look, let the computer do the work for you. Inside the regression line fractal framework, the deepest value plays are on the top shelf here. So Boeing is 6.5 ATRs below its long-term fair value. So Boeing, JP Morgan, American Express, 4.5. And then in the ETFs, Brazil, Mexico, Latin America, that's where the weakness is, guys. They're more than 7 ATRs below their long-term fair value. Daily squeezes, there's a lot of them on this one today. And again, that's because the volatility has been high for the last 14 days. But today's ranges were relatively small. So that sets up ideal conditions for a breakout from a range compression in either direction. If you think back to that couple of trades I just framed there with Cisco and Japan, that's a perfect example of what that looks like. And notice, here's Japan in the 5th position right now. It's got almost 3-to-1 reward to risk because it's so tightly compressed. Okay. Most everything is in the spring now. A couple things in the summer, treasuries and gold. And so when that is the case, I like looking for the things that are already well out of their river or have the highest Z-scores. So that leads me to look at like Pfizer, Cisco, Intel, Caterpillar. And then in the ETFs, I would be looking at Japan, EFA, technology, and healthcare. You'll see those in the speed run when we finish that up. Multi-time frame NDX, Walmart, and Pfizer in good shape. All of these that are in the green for the 10-day look back and the green for the 3-day look back, that's where their most current relative strength is. Consumer staples, oil, gold. And then the big things that got smashed today was AXP is just as bad as it can be. I mean, it just, on every look back period, and today it collapsed. So that would be on my short list of things that I want to get short on Monday if there's market weakness. In the market mosaic, you can see things stalling. The slope stack continues to improve as the rate of failure declines. The stretch stat is pausing after a nice almost 2 sigma move off the bottom. So that's not an unnatural act. And that's everything I want to cover on the daily. Okay. We're 50 minutes into this thing, fiddling around so much with the speed run, and I apologize for that. So let's get into the trading case studies. All right, so this one is Wynn Resort.